Last year I invested $100,000 into algo trading, and this morning I saw that the withdrawals, the pure profits, or the real money I made is over $16,000. Oh, and that's just from the live accounts, and there's more from the funded accounts. So I decided to record this video and show you how I did it. If I show the live results that we have transparently published on the Algo Trading Space platform, you will see that the total balance I have in live trading accounts is $74,149, and the withdrawals, this column over here shows all of the withdrawals, is $16,649, and you can actually set the accounts according to the ones that brought me the most withdrawals, but the combined withdrawal is what matters, and it's above 16k. And as you know, my rule is to withdraw every time I make 20% gain in the account. So if I look at the current balance, I'll be requesting a withdrawal very soon from the FX Stabilizer Pro, because it's a 5k account. 20% is $1,000, and I've already requested 3 times. So once it reaches 6,000, and I believe this will be very soon, probably within this week, I'll be requesting another withdrawal of $1,000. And if I click on the track record, you will see the 3 previous withdrawals. Now it took a little bit longer, and now it's very close to the 6k, so another withdrawal is on the way. Also, Waka Waka is getting close to the $3,600, so once it makes $600, I'm requesting a withdrawal. I requested already a withdrawal, and with the smaller accounts, you will see that if I arrange them according to the current balance, that would be the easiest, I believe. You can notice that I actually should request a withdrawal today from the multipayer EA on this 1k account, because it made 20%. So $200 I will request after recording the video. This one is very close with the Japan strike. I need less than $1 to get to the next 20%, because I already requested one time. Also, the Infinity Trader is nearly there. Same with the Dark Titan, where we are trading the New Zealand CAD. And withdrawal by withdrawal, slowly, actually I have already requested about $16,000 of withdrawals. Another coffee. I should reduce those. But while I was preparing it, I was thinking about the following. The money I put into algo trading is my working capital. Funds that I want to work for me. I'm not trying to build track records with thousands of % growth just to show off in videos. That's something vendors do. They sell expert advisors, so they need that kind of track record. My goal is different. I want to make real money. That's why when I see 20% profit, I withdraw it. Simple as that. I'm actually preparing a PDF with all my rules that we will make public on the Algo Trading Space platform, so stay tuned. Make sure to subscribe if you missed it. This approach keeps me grounded and very clear about my goals, regular withdrawals, and also help me avoid greed, because if you make it, let's say 100%, it's easy to start thinking, oh, I doubled the account once, I can do it again. And honestly, I'm not sure that's a healthy mindset. And there is a reason why Darwinex, for example, pay quarterly the performance fee. Let me show you what I mean. So if I go to the funded trading now and I show you the accounts and I arrange them actually according to the initial balance, you will see that on the top we have a couple of Darwinex accounts, and the one with the highest current balance is the one trading the powerhouse, or that's the sharpshooter strategy. That's an account that lost in the past like 30%. I've made money from it, then it lost because it hit the drawdown. However, I didn't lose anything on Darwinex Darwinex because it's Darwinex, and now it recovered. I'll show you that in a second, but before that I want to show you the second account, which is with the Happy Forex, and with this one I've made just above 5%. But if I show you my Darwin, you will see that there are 60,000 euro as current allocation. There is a drawdown recently in the account, but if I show you my allocations, you will see that I've received a performance fee of above 1,000 euro because the Happy Forex kept it really with a low drawdown until the moment, and just now recently there is a little bit of a bigger drawdown. So you can see that when the drawdown was somewhere at -2 to 4%, it was just fine, and now the current drawdown is something that the Darwinex engine doesn't like. But if I ask my editors to display my phone on the screen, you will see that on the 7th of November I actually received a 1,043 euro from Darwinex, which is the biggest amount I've made from Darwinex. So the good thing with Darwinex is that it uses a subscription model, so you can start with just 45 euro a month. And if you have a profitable strategy, and actually what we figured out with the team is important is to have a strategy. Obviously expert advisor is the best option with low drawdown, then you're gonna make it. Now if I show you the first account with the sharpshooter, you'll see that this one made above 10%. I've been running it nearly for 316 days, but if I show you the Darwin, you will see this drawdown that I was talking about. So at this point the sharpshooter made a huge drop of 30%. I had it also on my live account, but the thing with Darwinex is it doesn't breach. It's not like the prop firms or the funded accounts. You just lose the current allocation, but if your account starts to recover again, which actually happened since August last year, I am going to receive allocation again, and you can see that my current rating is 81.63. That guarantees allocation next month because the minimum rating needed is 75, and because I have purchased initially when I was starting, I've purchased the permanent allocation. You can see that I have an estimated performance fee of 612 euro from the permanent allocation, and if I receive extra Darwin allocation, then I'll be having some more performance fee, or that's the payout. That's what they call it in Darwinex. So you can keep an eye on the sharpshooter on the funded accounts as well as the Happy Forex. And the third expert advisor that brings allocation is the multi-payer PA, and there is a reason why Darwinex pays quarterly. Just when the quarter ends, you get your performance fee no matter what, and that's the right way for live and funded accounts. I also request immediate withdrawals from the other funded accounts or from the other funded platforms like trading.com or iFunds, and on the bottom you can also see all of the withdrawals that I've requested from the funded accounts. So a combination of live accounts, Darwinex, and funded accounts like iFunds and trading.com works really well for me. I don't just diversify by using different trading robots, I also diversify by trading across different platforms. And just a few days later, a couple of accounts were blown. A very weak dollar pushed euro and the Aussie up hard, and that move wiped a few of our accounts. It's a good thing I've made the rule of 50% drawdown limit in every account. For example, the FX Stabilizer Pro with the euro dollar opened many short positions, and they were just closed on the top of this move where euro dollar broke the 120 level. Also in the bigger 5k account where I was trading the FX Stabilizer, it was the euro dollar that caused 35% drawdown, but at the same time it was the Aussie that also reached the 35% drawdown because it just kept selling, and the Aussie climbed extremely aggressively upwards, so I had to withdraw the remaining balance. Another one was the FX Proctor Special, where again the Aussie hit the 50% drawdown, and I've withdrawn the remaining $500 in the account. Hey Sam, can you come for a second please? I've been checking the Proctor special on Aussie, and I looked at the demo account. I just want to see if we've missed something, if it was overexposed or too much risk. But when I look at the demo, we started it at the beginning of September, and it went really smoothly upwards. If I switch to equity, also there were no huge drawdowns before we started the live account, right? And I also checked the backtest you performed before starting the live account, and you can see the backtest since 2014.
2024, so yeah. 2-year backtest. Yeah, it looked great. I remember this one. It looks fantastic. Those equity dips are reasonably frequent, but they're pretty small.
Not to compare it to what happened last night. But the balance is the same thing with the equities, same thing. I don't see anything that we missed.
In fact, I think I did the video review of this one. We did our due diligence. We back tested it, and then we also demo tested it and compared the demo with the back test. And I was like, this looks like a great system. Everything is comparing well. I'm very surprised by this.
I think the solution is clear now. We should really focus on the $1,000 accounts and avoid trading bigger, like 5K accounts. So ideally, we can try to build a portfolio this year of 100 accounts, $1,000 each. So it will be like a 100K portfolio, and we will just diversify as much as possible. No matter how good the backtest or the demo account looks, it should be an individual account of 1,000. Let's say we have 100 accounts in here, $1,000 each. If something dramatic happens like last night and we lose 2-3 accounts and we have the 50% drawdown protection, it will be just $500. It will be just 0.5% from the entire portfolio.
I agree. I think as long as we do that in a way that we have it balanced, if we've got 100 accounts, we don't want too much exposure on any particular system. We don't want too much exposure on any particular pair. The base currencies, for example, we don't want too much on, say, US dollar or something, because that's what's caused this move. This has been particularly bad for the Aussie dollar, but as we've seen, we've other accounts that are certainly experiencing some pretty big drawdowns, such as the euro dollar. We want to just be clever and careful in how we balance that, and diversification is everything. We've even seen in the Discord that we've got some users saying, well, I did lose money on this, but thankfully I had a system that's been running really well on gold, and it's balanced things out, and it's like that's what you need.
Because since we've published the results, actually, I monitor it closely. It's somewhere between 3 and 4.5% a month. If we keep that with a 100K portfolio, 100 accounts, even if we lose a couple of accounts, 2-3 accounts this month, it's gonna be 1-2%. We'll still be on profit.
Yeah, it is. It's 1 to 2. Yeah, exactly. Yeah, it's 1 to 2%.
Basically, if we keep it at 4, it means we can lose 8 accounts this month to be break even, which is super rare. Like this never happened.
Yeah.
Like last night, we've lost 2-3 1K accounts.
We're doing our best to try and make a consistent income, but it's not every month that's important. It's over time. It's over 6 months. It's over a year that's really important. We are going to have the odd bad month, and maybe it might even be minus 2% on that particular month. Yeah. But if we've got 3 months before it that are 3-4%, then it doesn't matter. 4% over a year, that's like nearly 50% return. That's incredible. You know what I mean? We don't need that every month. It seems pretty robust and still certainly able to make some very good annual returns.
The thing is, we have about 50-60 accounts now, and if we add another 30-40, it's going to be really hard to manage it all. So we really want to build a solid trading team. I really want, to be honest, the best algo trading team in the world, no matter if it's in terms of size or in terms of skills, but it's really the best algo trading team in the world to handle this. And I think we can attract as well some of the VIP users to help with that.
Yeah, I think that's a very good idea. We're all doing our best to test and find good systems, but even recently we've started taking a lot of the accounts they're showing, the suggestions they're showing, the track records. It's really just as good as any vendor. In fact, even better, I would say. We look at the vendors, we see their live records. If a VIP user who we discuss ideas with and stuff, if he's showing, guess what, here's my track record, I've traded this for a couple of years and it's done well, that's excellent. That's incredible information for us. They are part of the team in many ways. So I think it's great to get them more involved.